Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The recent call to the US dollar index, which measures the greenback strength against a basket of 6 major currencies, was up towards the recent highs seen around August, which was at 93.60. Well, as you can see, we're just getting that price action clearing the level today and also posting a near 10-month high around 93.80. It is assessed from the technical aspect as the ADX remains relatively strong to the bullish case, and the RSI, although showing a little bit of a divergence there, but the MACD is clearly holding the strength to the bullish signal, could see a rise up towards 94.40. All eyes turn back towards US Federal Reserve Chairman Jerome Powell when he's scheduled for his second talk as he holds his second testimony before a different congressional commission. Overnight, he did say that it was fair to say, that is, inflation is more concerning than earlier this year, citing supply chain issues. He also repeated that they have all but met the test for tapering. As the dollar has anticipated to climb, let's look at the euro, and you can see the market is progressing further to the downside after it takes out the support of 116.75, with the ADX holding to a bearish case and the RSI still negative, married up to the MACD, now looks towards the next target of 116.1525 and reassess. If you are trading to the bear side or to the short side, do continue to lower your stop losses according to your risk management, because I do feel that we could see a bit of bullish traction from that 116.15 level. And do take note, however, if we close underneath there, there is little support until at least around 113.5. But that's a broader aspect, and this is a weekly chart. So in the short term, let's see if the demand does return close to that lower side of the range of 116. Well, looking at the Australian dollar, the market did attempt to try and break higher on Tuesday, and however from that challenge actually reverted to a negative case as it posted a bearish outside range day, and therefore from the rejection above that 73 handle now looks back towards this base that's held relatively well around 72.25. It is viewed, though, a close underneath that level would give further risk towards 71.70 and reassess from there. From a technical aspect, it is negative, so I do expect to see into the European session some bearish traction. With the 5-day bullish rise in dollar yen, we can see that there was a clear rejection from that top side 111.7090 that was challenged earlier this year in July. From the rejection has now put a slightly bearish risk into the next 24 hours, and therefore look towards 111.05. And if we see a break there, could see further traction down towards 110.50, which is somewhere around this region here where all these tops were, and also from the rejection from that challenge on the break up. Nevertheless, I'm not getting too bearish. This is just a bit of correction to the long side of the case, that the profit taking is now coming into play here since that top side retreat from that 111.7090. Sterling has plummeted further and now taken out many support levels and exposing the region now towards 134.70 as the market remains relatively heavy. But do note, although there is a clear call to the bear case from the ADX, there is a bit of bullish divergence from the RSI, but the MACD is weighing heavily, so it really depends on how strong that divergence is. I feel the market can actually drop lower and look towards that 134.70 before profit taking comes back in. That means that the strong rejection that we can see here in sterling yen and closing out a very large bearish outside range day, now taking on this large candle, could see further risk if the sterling leg continues to weaken. And saying that, Let's see if the market can first of all break the level of 150.40. That was the low today. A close under there will give a view towards 149.80 and the base holding at 148.80 to 149.20. The downside objective was reached for gold at 1,726 to 28, and due to that I am actually neutral. I'd like to see how the market plays because there is a bit of divergence here that could see a rebound towards the top side. Nevertheless, there is a bit of a trend there from the bear case from the ADX, but I wouldn't feel at this stage that the market can get too high. But with that slight divergence there, I'd rather sit neutral, and along with that, with my downside call at 1,726 to 28 was reached. So a neutral case. Let's see how the market plays into tonight. And wrapping up with oil, well, the market clearly rejected that July high, around $76 a barrel, and is still, though, attempting to recover. Let's see if the market can break lower. There is a bit of work to do on the downside before turning negative, and that is to see a break of 73.45, which nearly was reached today, got to 54. But I feel there is bears lurking up towards that top side of the range around 74.70, and I do feel that cap at 76.55 that we can see from the rejection should contain any bullish rise in the short term. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.